Starz is hands down my favorite idea right now. So there's two really good investor presentations out there. This is the UBS conference, December 2024, and this is Barclays February 2025. So I took these two transcripts. This is Jeff Hirsch, the CEO of Starz, just kind of outlining the thesis in a really concise way. I just copied and pasted these into GPT, and I said, give me the top 10 reasons to invest in Starz based on these two earnings calls, or they're not earnings calls, but investor presentations. So let's see what they come up with. I've got my own list, but I'm curious how well it'll align with those two investor presentations. And you have to read them to really understand the story. Okay, top 10 reasons. Soon to be ticker, so it doesn't even know this thing's trading yet. Okay, mispricing 3 times EBITDA versus 4.5 to 7 times for comparable companies. I think that's pretty spot on. I think it's a little higher now. Might be like just under 4x today, and 5.5 times EBITDA would be more than a double from here, something like that. Okay. Next, digital transformation. Oh, I love this part. So 70% of revenue is OTT, streaming subscription revenue. So they don't have an advertising stream. They don't have much of a linear business anymore. So this is a pretty clean business model compared to peers, especially if you comp this thing to AMC. Durable top line revenue is held at $1.4 billion for 7 straight years. That's pretty cool. I think that's pretty solid, right? I think it's a little weaker this past 12 months because of the strikes and everything, but that's a pretty consistent business from top line performance. I know the earnings haven't been as consistent as they transitioned from linear to OTT, but still, like, that's out of the way. Attractive cash flow, 15% EBITDA margin, 70% conversion unlevered free cash flow, little to no capex, NOLs, no cash taxes for several years, 30 to 40 million annual interest expense. This thing's going to generate a ton of free cash. Okay. Clear path to 20% EBITDA margins, right? So it's 15 today, and they think they can get to 20% in the next couple of years. And they lay out the 5 levers to get there, which are all pretty reasonable, right? They're like tangible things that actually make sense. Let's see. Price hikes, bundling, content cost reset. Yes, this one I think is huge, as they're no longer captive inside Lionsgate. Trimming underperforming shows, and 46 million savings from shifting international costs. So producing overseas versus producing domestic via Lionsgate. Leverage pay down, 3x EBITDA today. That's where they're at today-ish, right? They think they want to get to 2.8, so they're not even that far from their target, right? So market views this thing as a POS, levered POS, right? And they're saying, hey, we're already near our leverage target. That's how confident they are in their cash flow, which is pretty interesting. Let's see. TAM, underserved demos. So they're really dialed into their demo. I think that's very clear when you listen to them talk. They've got a couple of hit shows and a low-cost franchise strategy. Yep, dialed in. They're not trying to be everything to everyone. Optionality for an ad-supported expansion and tuck-in M&A. So there's no ad revenue stream today. None. It doesn't sound like they want to turn that on, but it's a stream that's open to them down the road. And then tuck-in M&A. I don't know what the market looks like for this. I can't imagine there's a ton of really small-scale M&A in this space. And well-timed catalyst, standalone listing mid-January. Well, it's already done, but yeah, I think this thing is not getting a lot of attention. People aren't really looking at it. So anyway, pretty good top 10 list. Probably, I don't know, I would massage a few of these things, but I think that sums up the thesis pretty well. If you want to get a good feel for what this thing's all about, go read these two transcripts from these two investor presentations. Super clean, super easy to understand. CEO gets it, completely dialed into the story. I think it's pretty interesting.